A pair of big wins for the stay-at-home trade. Peloton and Zoom both hitting all-time highs on the back of some bullish analyst activity. But we start off with Peloton, the stock gaining nearly 4% after Bank of America raised its price target to a new street high of $150 a share. Tim, do you buy into that?
I certainly haven't to this point. So kudos to all those folks that really understood the secular trend here. But this is right. So was it just a hardware company? Of course not. Was it just a software company? Of course not. Oh, how about a content company? And I think you get, at least what the analyst day about a month ago really was treated to, in the sense that 100 million subs isn't that preposterous. So the stock, at least in the short term and technically, and say what you will, this has been a run that's absurd. It's up 500%, and everybody knows these numbers. The opportunity here is great. I don't think it is right now, and I was saying that $200 ago, or excuse me, $100 ago, when I think this stock maybe has another 100 to the upside that probably beats me to that downside. But valuation's so tough, and something I've missed.
BK, earlier on our editorial call, you revealed that you are a new customer.
I am. Yes, I ordered one, I guess, about 2 or 3 weeks ago, and I've got a November 19th delivery date. So to me, the stock makes sense that the thing's a runaway rate train. I mean, it's a freight train here. And the reason why is everybody who's an investor is out there and they're buying this thing. They're seeing 6-week lead time. And it's kind of like Lululemon. I remember when Lululemon first come out, everybody at the end of the month would look at their American Express bill and go, how much did we spend on Lululemon this month? I got to buy the stock. I think the same thing's going here for Peloton. So it's hard to value in terms of looking at it rationally because you have that irrational behavior in it. It gets tougher to buy here, but I think I'm more in Tim's camp. I don't want to short this thing by any means because it is such a freight train.
Yeah, Guy?
Look, I think we've been pretty steadfast on this one for a while, and I'm going to compare it to Square in this way only. When Square came public, everybody said, oh, this is just a hardware company, and they completely discounted all the ancillary things. And it's similar to what's going on here in Peloton. Now it's trading at probably close to 9 times next year's revenues. I mean, deep end of the pool stuff, but you know, they just said they're building another factory. I think December the factory is going to be done. There's obviously huge demand. BK's on board. I'm sure B Icebreaker is going to grab himself one if he doesn't have one already. And I think you might see that $150 price target that Bernstein put on it into earnings, which I believe are early November.
Do you have one, Bonawyn?
No, but as I said a couple of shows back, I own the stock and let it go a little too early. But from a risk-reward standpoint, right, the stock's already here around 135, 137, somewhere in that range, and the price target is 150. Risk-reward, I don't really think it's there. I think you buy it on a pullback. I mean, I understand the data all stacks up. Subscriber growth, website engagement, all of those things translate well. The winter is coming, COVID spiking. I think that you can make the case as to why this is the perfect storm for them. But I do think a lot of this is pull forward subscriber engagement. And so I'm holding off here.
Shepard Smith here. Thanks for watching CNBC on YouTube.